Alrighty, I got good news for once. We're finally starting to see some weakness in the housing market in the United States. Existing home sales have collapsed by, I think it was 35% year over year. Although I saw another chart that had seasonal adjustments. I'll link to the Zero Hedge article. I read CNBC and Zero Hedge. CNBC cited the actual year-over-year decline was around 35%. Zero Hedge had the seasonally adjusted decline year-over-year at 27%. Either way, that's huge. The National Association of Realtors economist says that sales in November were basically non-existent, and that this was outside of the Wu flu lockdowns, the worst month for the housing market since the collapse way back when. 2010, I think, was when we last had a month that dropped year over year or that dropped month over month this bad. You know what? There's so many different metrics here. I'm going to retract that last statement because I might be getting mixed up with something else. Basically, the housing market's in bad shape. Interest rates have spiked, obviously, because of the Fed rate hikes, and so people can't afford to buy as much house as they used to. As I've said before, people buy houses based off of what the monthly payment is, not what the actual list price is. So the lower interest rates are, the higher the list price of the house that any given person is going to be able to purchase. And typically people max out their credit. They will borrow as much money as possible and buy the most expensive house that they can. And when housing prices are as high as they are in the South, for example, median homes prices are, for existing homes, $346,000, which, despite the fact that existing home sales are down 35% year over year nationally, prices across the board are still up. In the South, median home sales, or median home price, I can't remember if it's median list price or median sale price that they were using. Again, there was so many. I'm going to link to the article, the Zero Hedge one. I think Zero Hedge, as usual, has a better article on this than CNBC. Anyway, when the median price is $346,000, there's a lot of people who, even at the old lower interest rates, just couldn't afford to buy the house. It was the floor of the housing market was just too high. It was way over their heads. And with the increase in interest rates, even more so. Now, even more people, what we're seeing is more people are being booted out of the housing market entirely. There are more people now than at any point going back to the last crash. There are more people who are simply not participating in the housing market. They don't have the funds. They don't have the cash flow to participate. And so as housing prices continue to rise, at the same time that interest rates have doubled, there's an increasingly small pool of buyers. And as Zero Hedge points out, even at the high end, where people are paying cash for houses, where it's all the rich people who aren't getting a mortgage, people, paying over $1 million for their house, the millionaires and billionaires that Bernie always talks about. Less of them are buying houses too. Sales of homes over $1 million down 41% year over year. Now again, inventory is still down. Inventory is still declining. And so that's always going to be part of the reason why you have less home sales. If there's less homes available for purchase, you're going to see less home sales. That's pretty basic. But what we're also seeing is an increase in the time on the market on average for a house across America. I think that they said that in October, the average time that a house spent on the market was 21 days. In November, it was 24 days. That means that houses are taking longer to sell. 1 year ago, it was 18 days. So it's very quickly, in the latter months of 2022, houses are starting to sit on the market for longer and longer. And what happens when you have houses sitting on the market longer? Well, what eventually happens is people cut the prices. If houses aren't selling at the price that you listed it at, then you listed it too high. And so in order to see housing prices in America truly collapse, what we have to see are houses sitting on the market for months. This average of 24 days is still too short. I think that NARSET, National Association of Realtors, said that still 61% of all homes are sold within the first month. It's way too easy to sell a house if you have a 61% chance of selling your house within a month. You're not cutting your price if that's the case. And so we are going to need to see an even bigger drop-off because, yes, inventory is falling, but demand is collapsing even faster. So it doesn't matter if inventory is declining. It doesn't matter if less people are selling their house. If there's even less people, or if there's even more people who are no longer looking to buy a house. The trend of buyers leaving the housing market is stronger than the trend of the decline in housing inventories. And what's going to happen? Eventually, in probably a few months, at the rate we're going, we're seeing already houses sitting on the market longer. We're going to see the trend of buyers leaving the market completely overwhelm the decline in inventories, and you're going to see inventories start to pile up. And as inventories pile up, then that's only going to compound the amount of days that any given house spends on the market, because you have a greater and greater pool of available homes competing for a smaller and smaller pool of available buyers. And so this is a real reason to be hopeful. And this isn't something that I think is like grasping at straws, because this is something that we knew as soon as the Fed set out on their rate hiking endeavors. Rate hikes lead to declining asset prices, namely home prices. The last time that the Fed hiked interest rates and really meant it, we had the biggest housing collapse in American history. So we should expect that to happen this time around as well. That should be the base case. Houses are more overvalued now relative to average incomes than they were way back in 2006 in the peak of the last crisis. So this is not, me going out on a limb. This is what we would expect to happen. This is not kooky, fringe, financial theories. This is merely looking back at recent history and applying it to our current situation. It's not past performance, being indicative of future results. Making the mistake of thinking past performance is indicative of future results is just looking at at a trend and saying, oh, well, that trend is going to continue because, the NASDAQ has been going up at such a faster rate for the last 10 years than the S&P and the Dow. Well, then that means that why would you buy anything but the NASDAQ? Everyone should just put all your money in the NASDAQ, and that's how you're going to make the most money. That's a flawed and very dangerous way of thinking, because it's not taking into account any sort of factors in reality. It's just looking at numbers on a piece of paper. It is Dave Portnoy level investing. Now, somebody could still make the case, oh, you should put all your money in NASDAQ, but they would need to dress it up with something like, hey, I think that tech is still is still a very high growth area, and I don't think that the risk is sufficient to explain these higher returns. I think that on a relative basis, the NASDAQ is a better buy, blah, blah, blah. And so I'm not saying that, housing is declining, and so therefore it's going to keep declining, and it's going to decline even more. What I'm saying, very plainly, is that people need low interest rates. The lower interest rates are, the more people can spend on a house. So therefore, the higher interest rates are, the less that they can afford a house. And so when you see interest rates raised by the Fed to the point into where they were back in the days prior to the last housing crisis, I think that it is reasonable to say that we're going to experience a similar collapse in housing prices. It's not like we've had an explosion of the American population. It's not like housing is so unattainable because, the American population, because there's a baby boom and people are just, reproducing at such a high rate, and that we've had a 50% increase in the American population and there just aren't enough homes for everybody. That's not the case. Our population is increasing at a snail's pace, and yet homes are being built at a rapid rate. That, to me, looks like a bubble. So with that said, I will see you folks back here hopefully tomorrow. We're getting now kind of around Christmas. I might have, family stuff to do, so I can't promise on every single day.